Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. There may be trade policy chaos, and it may get worse, but you wouldn't know it from today's data, especially June data from China. But first, India said its CPI inflation is falling, and quite quickly now, taken lower by falling food prices. The CPI fell for the 8th straight month, down to 2.1% in June, the lowest level since January 2019, and down from 2.8% in May. Analysts had expected it to fall to 2.5% in June, so this is quite a sharper move lower. You may recall the recent 7.4 peak in October 2024, then also driven by food prices. The question now is, will the Reserve Bank of India cut its 5.5% policy rate? Many analysts don't think the Indian Central Bank is ready to do that yet. They next meet on August the 7th. In Singapore, they said their economy was 4.3% higher in the second quarter of 2025 than the second quarter of 2024. Their GDP rose 1.4% seasonally adjusted in the 3 months through June. Analysts had expected the rise to be only 0.8%. Construction helped drive the June result, surging 4.4%. The first quarter 2025 contraction was revised to 0.5%. Apart from that first quarter 2025 stumble, their expansion has been rising since early 2023. In Japan, machinery orders didn't fall as much in May as anticipated after a big dip in April, so they ended 6.6% higher than year-ago levels. In China, so far, the Trump tariffs or the uncertainty surrounding them have had no noticeable negative impact on their exports. Those came in at $325 billion in June, up 5.8% from a year ago, up $9 billion from May. This was better than expected. Imports were little changed, up 1.1% from a year ago, slightly softer than expected. The main impact of the US tariff war against everyone is that China is benefiting as the US makes enemies everywhere. The details by country are in our story. China's trade surplus widened significantly to $115 billion in June, up from $99 billion in June 2024. China's trade surplus with the US widened as well to $26.5 billion in June, up 47% from May. Meanwhile, new yuan loans rose in June and by more than expected. Typically, we see a June rise as banks rush to achieve quarterly targets, but this rise is far better than even for that, and better than the rise a year ago. Helping was a Beijing push to front-load bond sales being rolled out to support their economy during the tariff trade war. In the end, they issued 2.24 trillion yuan in new loans in June, well above the 1.8 trillion expected. However, we should not forget the impact of consumer subsidies being deployed to keep China's retail demand elevated. They seem quite effective, but clearly they cannot continue indefinitely. Some regions are already starting to turn them off due to cost reasons, so we won't have long to find out the reaction to that. In the US, all eyes are on what the June CPI inflation will come in at. It was 2.4% in May, and it is widely expected to come in at 2.7% in June when it is reported tomorrow. Markets price no chance of a rate cut by the Fed at their next review at the end of the month. The US Treasury 10-year yield is now at 4.43%, little change from yesterday at this time. And the price of gold will start today at $3,349 an ounce, down $6 from yesterday. And American oil prices are down $1.50 at $67 a barrel, while the international Brent price is just over $69 a barrel now. And the Kiwi dollar is now at 59.7 US cents, down 40 basis points from yesterday. Against the Aussie, we're down 10 basis points at 91.3 Australian cents. Against the euro, we're down 20 basis points at 51.3 euro cents. That all means our trade-weighted index starts today at just on 67.4 and down a net 20 basis points. And the Bitcoin price starts today at $119,767 US dollars and up 0.8% from yesterday. And that takes it over 200,000 New Zealand dollars. Volatility over the past 24 hours has been modest though, just on plus or minus 1.9%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.